Florida's housing story has split in two. On one side, a year erased a median of $10,157 in home value. On the other, a $520 million land deal set the stage for the tallest office tower in South Florida. Here is the causal chain, told in numbers. From January 2025 to January 2026, 9 Florida markets saw 5-digit losses in typical home value. In Punta Gorda, the drop cut the deepest, down 7.97%, a median $26,624 gone in 12 months. In that same corridor, profit margins on typical sales compressed from 88.3% to 58% by the third quarter of 2025, a staggering reset in less than a year. The metros, lined up behind Punta Gorda, tell a similar tale. Cape Coral, Fort Myers, Northport, Bradenton, Sarasota, Naples, Marco Island, Sebastian Vero Beach, West Vero Corridor, Lakeland, Winter Haven, Port St. Lucie, Wildwood the Villages, Deltona, Daytona Beach, Ormond Beach, and Homosassa Springs. Across them, value declines ranged from roughly 3 to nearly 8%. Only 4 of 29 Florida metro areas managed any gain at all. The increases were tiny. Arcadia added $511, Palatka $635, Clewiston $1,335, Lake City $2,427. That's the backdrop. 25 metros underwater, 4 barely above it. Zoom into a single county to feel what the numbers mean. In Collier County, home to Naples, the median list price in December stood at $729,725. That was up 1.2% from November's $722,900, but down 5.8% from December 2024's $775,000. Price per square foot told the same story, $415 in December, 5.5% lower than a year before. And homes took longer to move. Median days on market stretched to 75, 2 days slower than the national median of 73 in December, and up from 72 days just 1 month earlier. Step back to the statewide view. Florida's median home list price in December held flat at $425,000, exactly the same as November. The typical Florida listing in that snapshot was 1,623 square feet, at $260 per square foot. Nationally, the median list price was $399,950, with the typical listing at 1,800 square feet and $220 per square foot. Even as values slipped in many Florida metros, asking prices in December still sat above the national median and carried a higher cost per square foot. What happened and why? 2 forces explain most of it. The first, a slow correction from the post-pandemic buying frenzy that pushed values past sustainable levels. The second, weak housing demand as prices stayed high, leaving many buyers unable to compete. The chain reaction is visible on the ground. Listings sit longer. Price cuts follow. In some places, the buyers who remain are more selective, and they come with leverage to negotiate below list. Inventory patterns and migration flows sharpen the effect. Where inventory rose and in-migration cooled, sellers lost power and overpricing backfired. 40% of listings, one advisor in Central Florida said, now linger past 90 days. At the beach, the slowdown is tangible. In Daytona, a single week showed 210 listings aged beyond 90 days at an average of 244 days on market. That's an 8-month wait between planting a sign and finding a buyer. Carrying costs are adding drag, especially on condos. Median monthly HOA fees climbed from $125 in 2024 to $135 in 2025, an 8% increase in 12 months. Signals suggest those rising fees weighed more heavily on condo demand, while single-family homes held firmer where inventory stayed scarce. Still, this is not a statewide freeze. In some pockets, activity quickened. In the Sebastian Vero Beach area, one agent described January pending and sold counts more than doubling year over year, a sign of transactions thawing even as values corrected. And inside that same metro, the split between luxury and middle market widened. The exclusive St. John's Island Club carried a median list price of $4.65 million, while the Metro's overall median list price was $357,379. Two realities, one coastline. Back in Collier County, the market's day-to-day mechanics are shifting in real time. New listings totaled 1,154 in December, down 18.2% from 1,410 new listings in December 2024. Fewer fresh listings mean less new supply at precisely the moment buyers have grown choosier. Put those together with 75 median days on market and $415 per square foot, and a picture emerges. Sellers must price to today, not to last year. The reset is not just about prices and days on market. It's also about geography. The heaviest value declines clustered along Florida's Gulf Coast and parts of the Central Spine. Punta Gorda, Cape Coral, Fort Myers, Northport, Bradenton, Sarasota, Naples, Marco Island, Lakeland, Winter Haven, Port St. Lucie, and the villages among them. On the Atlantic side, Sebastian Vero Beach and Deltona Daytona Beach, Ormond Beach, joined Homosassa Springs in the pullback. Meanwhile, tiny gains in places like Arcadia and Palatka hint at local dynamics, thinner inventories, lower absolute prices, or simply later cycle adjustments. And then there is Miami. In the urban core, a different engine is humming. Developers have trained their focus on downtown, Brickell, and the adjacent waterfront neighborhoods. In December, a $520 million deal for 4.25 acres on Brickell Bay Drive closed, just one block from where a financial giant is planting a new headquarters. The plan on paper. A tower already approved to be the tallest office building in South Florida, rising within a district that is redefining itself at speed. Nearby, the Miami World Center is reshaping 27 acres into a mixed-use hub. The new signature bridge is set to connect downtown with the beach by car and stitch more than 30 acres of park space into the urban fabric, tying the core to Overtown and surrounding neighborhoods. Listen to how this capital builds. The new product skews smaller in size but heavier on location, walkability, restaurants, retail, transit. Areas like Edgewater, just north of downtown, sit a stone's throw from Wynwood and the Miami World Center, with I-95 ramps close by. Transit matters. The Bright Line now links Miami to major South Florida cities and smaller stops like Aventura and Boca Raton, making neighborhoods around stations natural magnets. Developers expect a wave of live local projects over the next couple of years, bringing multifamily buildings that include workforce housing into proximity with office districts. Costs define the playing field. Land and construction have climbed so high that in Miami's urban core, delivering new residential at under $1,000 per square foot is described as essentially impossible. Many of the next towers are new and prime, priced above area medians by necessity, not by choice. Some project budgets now start around $500 million, pushing builders toward innovative designs to keep final prices within reach of their target buyers. That juxtaposition, values resetting in many metros while cranes swing over downtown Miami, frames the Florida market's reality in early 2010-6. Demand is not gone, it has split. Higher-income households are flowing into Miami-Dade County, with the median income of in-movers significantly above those moving out. In that corner of the state, the story is about attraction and capacity. Who can afford product priced at 4 figures per square foot, and how many smaller units are needed to meet workforce demand near transit? Elsewhere, the work of correction continues. In Naples Marco Island, median list prices fell 5.8% year-over-year in December, landing at $729,725. The same month, price per square foot in Collier County slid to $415, down 5.5% versus December 2024. These are not collapses. They are recalibrations that bring asking prices nearer to what active buyers will actually pay. The cadence of days and dollars tells the tale. In December, the Florida median list price held at $425,000, unchanged from November, while the national median sat lower at $399,950. Florida's typical listing was smaller than the national 1,623 square feet versus 1,800, but carried a higher per square foot tag, $260 versus $220. That mismatch is part of what's cooling demand outside the Miami core. Higher sticker prices per foot than the national norm, but not always paired with big city salary scales. Behavior inside the market is shifting with it. Sellers who aimed for pandemic-era comps are finding a cooler reception. In some metros, 40% of listings now linger beyond 90 days, putting pressure on owners to cut, cancel, or simply wait. One recent week in the Daytona Beach-Ormond Beach area recorded 210 listings sitting past 90 days, averaging 244 days on market, 8 months of taxes, utilities, and HOA fees before a sale. The HOA piece matters. Median fees rising from $125 per month in 2024 to $135 in 2025 is an 8% jump. On a basic 1,000 square foot condo, that $10 increase per month sounds modest. But multiply fees across larger footprints or pair them with insurance and maintenance, and cost of ownership climbs fast. Signals suggest those rising monthly costs have softened condo demand relative to single-family houses, where inventory remains tighter and owners are less exposed to association assessments. At the same time, buyers are finding room to maneuver. In the Sebastian Vero Beach West Vero corridor, one metric jumped off the page. January pending and closed sales more than doubled compared with the same month a year earlier. When values correct and inventory turns over, activity can surge, not because prices are soaring, but because buyers see a path to a fair deal. Inside that metro, the contrast between segments is almost cinematic. The secluded St. John's Island Club carries a median list price of $4.65 million. Drive off the island, and the broader area's median sits at $357,379. Two prices, two buyer pools, one coastal breeze. The lesson repeats across Florida. Exclusives hold their own universe, but the median buyer calibrates to today's comps. What does this split mean for those making moves? For sellers in the west and central metros, Punta Gorda, Cape Coral Fort Myers, Northport Bradenton Sarasota, Lakeland Winter Haven, Port St. Lucie, and the Villages, the message is discipline. In Punta Gorda, a 7.97% value drop and a $26,624 median loss in a year signal a market that punishes overpricing. Price to current demand, and you still sell. Ignore it, and you may join the 40% aging past 90 days. In Collier County, timing and pricing are now strategy. With 75 median days on market, 2 beats slower than the national 73, and new listings down 18.2% year over year to 1,154 in December, well presented. Correctly priced homes can still find a buyer, but the days of throwing a number at the wall are gone. For buyers, the Florida map now reads like a menu with footnotes. State median, $425,000. Naples median list, $729,725. Sebastian Vero Beach median list, $357,379. United States median, $399,950. Florida cost per foot, $260. Collier County, $415. National, $220. Choose your line item, house or condo, Gulf or Atlantic, urban or suburban, and the math changes. In Orlando, even within a single metro, one zip code has emerged among the hottest housing markets in the country in the fourth quarter, with homes there selling faster and prices gaining momentum faster than anywhere else locally. Heat can concentrate at a granular scale. Turn again to Miami. The urban core is a story of proximity and price. A $520 million acquisition on Brickell Bay Drive gathers 4.25 acres one block from a new headquarters rising. 27 acres at the Miami World Center are becoming a city within a city. More than 30 acres of parks will link downtown's signature bridge to Overtown as lanes tie the core to the beach. Brightline stops spread the map to Aventura and Boca Raton, lifting the appeal of neighborhoods around stations. Developers are designing smaller apartments deliberately, embedding them above restaurants and next to transit. The financing math is unforgiving. Below $1,000 a foot is described as virtually impossible in the core. So projects lean into premium features and prime locations to support prices measurably above area medians. Submarkets like Edgewater, a quick hop from Wynwood and the CBD, are positioned to keep growing on those fundamentals: walkable streets, nearby offices, highway access, and the glow of downtown. Elsewhere in Miami-Dade, Coconut Grove, Coral Gables, and South Miami are mature neighborhoods where the development play now is redevelopment, older single-family homes giving way to new versions rather than entirely new subdivisions. The human side of the split shows up at the closing table. In markets absorbing a correction, appraisals and negotiations are finding a new middle. Balanced market is the phrase that fits. Sellers who price strategically still see strong activity, and buyers are able to be selective. Where January's pending and sold counts doubled year over year, the signal is not a return to runaway gains. It's a return to deals. In Miami, the calculus is different. The median incomes of people moving into Miami-Dade County are higher than those moving out. That widening spread packages demand for new and prime, with a workforce that still needs housing near the urban core. The answer developers see is a mix: condo towers for higher income arrivals and live local multifamily that carves out units reserved for local workers, all within a mile or two of the jobs and the trains. Across the state line, compare a few numbers and the divergence sharpens. Florida's December median list price, $425,000, unchanged month to month. Collier County in the same month, $729,000, $725, up 1.2% from November, but down 5.8% year over year. Deltona, Daytona, Beach, Ormond Beach, 210 stale listings in 1 week, averaging 244 days on market. Sebastian Vero Beach, $357,379 at the median, while a private island enclave lists at a $4.65 million median. These aren't contradictions. They're the coordinates of a market recalibrating by segment, by neighborhood, and even by street. If you're financing or building in this landscape, the ripple effects are clear. Sellers with units priced under realistic comps will continue to face longer holds with a growing share beyond 90 days. Condo associations adjusting fees from $125 to $135 on average in a year, an 8% move will pressure net affordability. Builders daisy-chaining construction loans in Miami's core must design smaller, smarter, and closer to transit to pencil out at prices above $1,000 per square foot. Lenders, watching months-long days on market in Daytona and value declines near 8% in Punta Gorda, will underwrite tighter with appraisal comps resetting lower in many metros. For agents and buyers, Florida in early 2010, 6 is a mosaic. The Gulf Coast markets, Punta Gorda, Cape Coral, Fort Myers, Northport, Bradenton, Sarasota, and Naples, Marco Island, map to a cautious base case: more price precision, longer marketing times, and buyers who still show up for homes that are priced to today's reality. Central Florida's Lakeland, Winter Haven, and the Villages echo the rhythm. Not a collapse, but a measured step down. On the Atlantic, Sebastian Vero Beach shows that even with a $357,000 median, luxury pockets can live in their own orbit at $4.65 million. Farther north, Deltona, Daytona, Beach, Ormond Beach, is teaching a hard lesson about time. 244 days is an expensive wait if your plan depends on last season's comps. Then there's Miami, where the skyline and the spreadsheet are both moving quickly. Brickell Bay Drive's $520 million land assembly, the 27-acre Miami World Center, and more than 30 acres of new parkland beneath the signature bridge each tilt demand toward the core. If under $1,000 per square foot remains a practical floor for new construction, then the core's supply will stay concentrated at price points above county medians, even as live local deals seed income-linked units within reach of the workforce. The expectation from builders is clear. Over the next couple of years, more multifamily with a workforce component near CBDs, and continued condo development where out-of-state demand is deepest. In Orlando, microgeography is destiny. One local zip code ranked among the hottest housing markets in the United States in the fourth quarter, with homes there selling faster and prices advancing more firmly than anywhere else in the metro. That hyper-local heat matters. A 10-minute drive can separate a quick sale from a 90-day wait. What's next? Base case first. Through the next year, signals suggest Florida continues a slow correction outside the Miami core. The statewide median held at $425,000 from November to December. That flat line is a clue that asking prices may be stabilizing after a year of retrenchment. In Collier County, list prices that were 5.8% lower in December versus a year earlier, and per square foot prices down 5.5% to a glide path, not a cliff. Expect longer marketing windows to persist in places like Deltona, Daytona Beach, Ormond Beach, where weeks of data show 210 aged listings averaging 244 days, and in metros like Punta Gorda and Cape Coral, Fort Myers, where last year's declines approached 8%. For well-priced homes, absorption remains solid. For stretch asks, negotiations and price reductions will continue. In Miami's urban core, the base case is strength with segmentation. With land and construction costs setting a practical floor near $1,000 per square foot for new builds, a mix of smaller unit sizes and amenity-rich locations will carry condo and rental towers forward. The $520 million Brickell Bay Drive deal, the 27-acre Miami World Center, and the 30-plus acres tied to the Signature Bridge are anchors for that thesis, supported by transit links like Brightline to Aventura and Boca Raton. Over the next couple of years, watch for live local multifamily to open a path for workforce housing near CBDs, even as luxury towers continue to pre-sell to higher-income newcomers. 2 watch items should be on every dashboard. First, operating costs in shared ownership communities. Median HOA fees climbed 8%, from $125 to $135 in a year. If fees step again in 2026, expect more softness in condo demand relative to single-family, especially in metros already wrestling with longer days on market. Second, the time on market backlog. When 40% of listings sit past 90 days in parts of Central Florida, and when Daytona shows 210 aged listings at 244 days, in a sample week, that tail can wag the dog. If that share stays elevated through the first half of 2026, price reductions will keep resetting comps lower, extending the correction in those metros. A third, quieter signal to monitor is new listing flow in pricier counties. In Collier, December brought 1,154 new listings, an 18.2% drop from 1,410 a year earlier. If new supply continues to lag year over year, it could tighten inventory just as buyers regain confidence at corrected prices. That mix, fewer new listings, slower but steady absorption, would argue for a floor under list prices by late year, even in markets where values slipped sharply in 2005. None of this is abstract. It's the shape of choices playing out in real time. In Naples, a 3-bedroom listed at $415 per square foot will not be judged against a neighbor's 2024 sale at a higher price per foot. It will be tested against current buyers in a county sitting at 75 median days on market. In Vero Beach, a townhouse competing near the Metro's $357,379 median will sell on merit, while a luxury island listing at $4.65 million will find its own smaller pool. In Miami, a 1-bedroom in a new tower near Brickell Bay Drive will not be priced against broader county medians. Its comp set will be a cluster of buildings where under $1,000 per foot is off the table and proximity to transit, offices, and amenities is the product. So the map is simple to describe and complex to navigate. Values fell by a median of $10,157 across Florida from January 2025 to January 2026. In Punta Gorda, the decline hit 7.97%, or $26,624 at the median, and profit margins on sales shrank from 88.3% to 58% by the third quarter. 4 small metros, Arcadia, Palatka, Clewiston, Lake City, eked out gains of $511 to $2,427. In December, Florida's median list price held at $425,000, while Collier County's landed at $729,725, down 5.8% year over year and up 1.2% month to month. Price per square foot in Collier sat at $415, down 5.5% versus December a year earlier. The national median list price was $399,950. Typical per-foot pricing was $220 nationally and $260 in Florida. On the ground, 40% of listings in some areas rode past 90 days, with Daytona showing 210 such listings averaging 244 days. Median HOA fees rose from $125 to $135 in a year, an 8% bump likely weighing on condo demand. Yet movement is building in corners like Sebastian Vero Beach, where January pending and closed sales more than doubled year over year. And in Miami, a $520 million 4.25-acre Brickell Bay Drive deal feeds a skyline that now includes a fully approved plan for South Florida's tallest office tower, plus the 27-acre Miami World Center and more than 30 acres of new downtown parkland under the Signature Bridge. That is the Florida split in 2006, a reset bringing prices back to earth in many metros, and a high-cost urban build-out riding a wave of higher-income in-movers and transit-linked growth in Miami-Dade. If you are buying, selling, building, or lending, set your compass to those numbers, and watch the fees you pay, the days you hold, and the cost per foot you chase. Stay with us for clear, numbers-first breakdowns of Florida real estate as this reset unfolds.